The 1099K rules just changed. Again, the $600 threshold everyone panicked about, gone. But that doesn't mean you're off the hook. Today, we break down what creators need to do right now to stay compliant.
Your creative genius deserves the same precision behind the numbers.
Welcome to Let's Get Fiscal, hosted by Anastasia, Maisha, and Danielle.
Part of the women-led team at Coterie Tax.
From smart tax moves to cash flow strategy,
we decode everything it takes to run a thriving creative business
so you can scale with confidence and sleep easy at night.
Press play and let's grow your business.
All right, so let's jump right in. We are going to talk about a 1099K.
Exciting.
I know, just when you thought you knew all of the different numbers and forms, we're going to throw this guy in.
Okay.
So this is the one that everybody was really kind of freaking out about, where like Venmo and PayPal and Zelle were going to be sending everybody this 1099. And they were like, well, what if my girlfriend pays me rent? Then now I'm suddenly going to get this 1099 that goes to the IRS because I received money, you know? And how do I handle that? Because traditionally the threshold was $27,000.
Gotcha. Okay.
So a lot of people, it wasn't really getting to them like on Venmo. If you're just kind of like doing little transfers and things like that, they weren't really caught, but they were going to drop it all the way down to $600 to match the 1099 miscellaneous and the 1099 NEC.
Oh, that would have been just like 3 weeks of brunch for me and you. So, like, that's not good. Okay.
I like, yeah.
We would have gotten one.
Yeah. Okay, so listening, so it's like, yeah. No,
yeah, we're not spending $600 at brunch. No. Okay, go ahead. So they did not do that? Is this threshold dropping to 600?
It was supposed to happen in like 2021.
Oh, okay.
It was like such a huge thing to get everybody on board, you know, all of the payment processors, so Venmo, Zelle, PayPal, everybody has to be on board to suddenly send out a massive amount of forms. But also the IRS was like, we can't do that. We already have a whole huge backlog and we're literally burning information in the hopes that you just send it again. You know, so they've been trying to slowly roll it out and like slowly lower it from the $20,000 down to the $600.
Okay.
And then also they've been like saying like, oh, we know we're supposed to do it, but we're not going to enforce it this year. You know, so that's why we haven't really seen it come up. But every single year, at least for the beginning part of the year, there's always like this kind of dance of will they or won't they? Will I receive this tax form? And how do I figure this out? And really, it would have affected a lot of people that right now are filing on their own, you know? So now suddenly you have to do these like more complex scenarios to be able to explain to the IRS computers why this isn't really your income and why they shouldn't send you a bill because you're not reporting all of the forms that they've received, you know? So then all of these people that maybe have, you know, like I said, like they're just sending grandma money. Now grandma has to, you know, get a tax professional because she has no idea what to do with these forms. So the new law, so it was supposed to be, I think, like $2,500 or more this year. And then, you know, next year would go down to the $600, which again is a threshold that was created in the 1950s.
It is a very low threshold.
So, you know, it's like really ridiculous that it would even get that low. So one of the things that the One Big Beautiful Bill Act changed was that it's going to be $20,000, so back up to the $20,000, and they made it retroactive. So, you know, that kind of gives, you know, some people a little bit of leniency if they were supposed to report, but they didn't report and all of that. But they've also added in an and into the situation. So it's $20,000 and 200 transactions.
Okay.
So a lot of times when I see this is Airbnb, Shopify, PayPal, not so much Venmo, but sometimes Venmo. Stripe definitely will send them. So now they have increased that threshold again. So it's really only going to be for those medium to larger size businesses. So if you're just selling at a little small farmer's market,
Mhm.
maybe once a month and you're only making a few $100s, then it's not going to be this huge thing where now you suddenly get this form that you have to be able to substantiate where this income is all coming from.
Yeah.
Um, so that is really nice and helpful. And we don't have to worry about, there's a couple different methods, but, really it was just reporting it as your income, but making a note that it's not really your income because it was for personal use, and then reporting a deduction and then saying I'm deducting because this is, erroneous. And it's a whole
Yeah, I'm trying to think like
thing
Venmo I
that
literally use for just like, hey, you paid for that meal, so here's $40. Like it kind of is crazy to be like,
Mhm.
oh yeah, now you have to parse through like what were all these things
Yeah.
for? Because like
Right
I use
now,
emojis,
Venmo is
so
going to
like
send you,
pizza
and
symbols.
especially because you're not expecting it to come in. So then
Mm-hmm.
you file your return. You're not including any of that information
Mm-hmm.
because,
Mm-hmm.
there's some people, e-file opens up on like January 22nd. And so they get their W-2 from their employer, they file their return, they get their refund
Mm-hmm.
done and over
Mm-hmm.
with, like before January is even over. And if these forms aren't out yet, then all of a sudden they file their return, and then in 6 months they get a bill because they didn't report any of this because they
Mm-hmm.
weren't even thinking about it or didn't know what to do with it. And,
Yeah.
so definitely would have created a bunch of problems, which is why even the IRS has been,
Like,
dragging their
no,
feet.
thank you. Okay.
And that's, one of the things that you have to keep in mind is that the IRS is doing the things that Congress is telling them to do,
Mm-hmm. Mm-hmm.
so, and there's always a little bit of a difference between, what Congress is intending and how the IRS interprets it and actually, enforces it.
Mm-hmm.
So that's where we kind of have that tax law that comes into play, but we have all that fun stuff.
So let's get back to like definition wise. So 1099K versus a 1099 NEC. Like
Yep. Yeah.
what are they? What are the
What's
differences
the
here?
difference?
Yeah, yeah.
So a 1099K is specifically from a payment processor.
Okay.
So it's someone that you are using in order to get your income.
Okay.
So a 1099 NEC is payment for services that you're providing.
Okay. Okay.
And so the 1099K really doesn't have anything to do with your services or anything like that. It's just, are you accepting credit cards from your
Gotcha.
clients?
Mm-hmm.
That
Mm-hmm.
would trigger your 1099K. And like I said, even with the Airbnb, that triggers 1099K because Airbnb is acting like a middleman collecting the funds from the like the renter,
Mm-hmm.
and then you are, receiving the remaining amount. And one of the biggest things with the 1099K is the 1099K, when it's reported, it will always show the amount that the payment processor actually collected. And so when you think about payment processing, normally they charge you, let's say like 30 cents
Mm-hmm.
per transaction plus
Yeah.
2.5%. So the amount that gets deposited into your bank account
Is different than what was actually charged. Yeah.
which can also be confusing
Mm-hmm.
sometimes
Yeah.
to business owners. So it's really important to make sure that whatever income you are reporting, which would be all of your income,
Yeah.
matches the amount that's listed on the 1099K.
Okay.
And then the difference is going to be your fees, your merchant processing fees, which are a legitimate business deduction. And
Mhm.
then at the end of the day, you come out to the exact same number that was deposited in your bank account. It's just a little bit of an extra step
Yeah.
that kind of
Yeah.
comes into play. So sometimes when people, let's say they have a Shopify account, they're taking Shopify payments and they just give me their bank statements. Say, okay, that's fine. But I also need the source
Shopify report.
information. Yep.
Mhm.
Like from the 1099K, I want to see exactly what information are they providing to the IRS. Do I agree with all of that information? And then kind of making sure that that goes through. And then also making sure that the correct entity is listed on some of these accounts.
Okay.
So that can happen a lot
Okay.
where, especially if you just like put in your name and your social security number.
So then all the income is being
It's under
reported to you.
you.
Yeah, and not the
But if you
business.
have an S corporation,
Mm-hmm.
then you're reporting all of the income under your S corporation
Mm-hmm.
because that's your business. But when they create the form, it's going to go to you as an individual. So when the IRS sees it, they're not going to look at anything else. They're
Yeah.
just going to say like,
Okay, you got
here's the
this.
taxpayer number. Here's
Mm-hmm.
the tax return that you provided. It doesn't include this number. So therefore you owe us money. And then they
Mm-hmm.
kind of move forward from
So
there.
more checks and balances there to just make sure everything is set up correctly so that where the
Mhm.
income is going is to the correct spot. And then also that the income that is being
Mhm.
reported
Mhm.
matches.
Yeah, because
Okay.
trying to get some of these like larger corporations to redo
Mm-hmm.
a
Like a
form
form.
can
Mm-hmm.
be basically impossible. A lot.
That's fair. Yeah. Yeah. Especially now we always talk to AI instead of like a person anymore. Like it's all, yeah, all those little
Mhm,
chats and
mhm.
stuff. Yep.
One of the things too that I also want to make sure everybody keeps in mind is that the One Big Beautiful Bill Act changes things on the federal level. This is
Mm-hmm.
the federal government that works that, you know, and that's where the IRS is taking all of their information, but it's the IRS who's collecting the federal income taxes. All of the states can do whatever they want.
So making sure they're aware. Okay.
So
Okay.
even like in California, California does not conform to the the IRS. So anytime the IRS makes a change, it actually has to be approved by the state of California. And then there are other states that are similar. You know, some states just default to, you know, like we'll follow whatever the IRS is going to say,
Mm-hmm.
but not every state does that. You know, sometimes they say like, hold up, we need some time to read whatever you guys are doing,
Yeah.
and then we'll find out if we're going to agree with that or not. And some states just decide to completely disagree. So
Okay.
if even though the federal government is going to have that higher threshold, you do need to just be aware that you might still receive a document because your state is going to have continue to have that lower threshold, or they'll have the $20,000 threshold like it was before, and they're
Mm-hmm.
not including that because it used to be, you know, if you had either one of those things happen, because, you know, you could have, like I said, 100 transactions
Mm-hmm.
or 200 transactions that are all for a penny,
Mm-hmm.
even though that's like well below the $20,000 threshold, they're still going to send something out to you. And that's kind of, you know, what our expectations were. So now they're adding in that and. So we're looking for like a substantial amount of activity, a substantial dollar amount. And then that's what's going to trigger that form. And then that gives the IRS an even bigger picture of what the business is doing. Because again, if you are selling inventory through Shopify, you're not going to receive a 1099 NEC.
Mm-hmm.
So when is the IRS going to be triggered on how you're getting income? You know, so there are forms going out, and I mean, there's always forms. There's always things that are kind of happening behind the scenes. But this is just another one that business owners need to kind of keep an eye out.
Okay.
You know, so even if you decide to only deal in cash and only deposit cash into your bank account,
Mm-hmm.
there's still going to be reports that are sent to the IRS about that.
Yeah.
So this just really makes the tracking a lot easier because there was like so many concerns about business versus personal and how is that going to be handled. And I also, you know, I also recommend creating business accounts for everything. And then that
Mm-hmm.
also kind of solves this like 1099K is going to the wrong entity. And
Yeah.
now you have like all of this weirdness happening. Just making sure that you have a business checking account, that you have a business Venmo account, that you have a business PayPal account. And I do recognize that there are more fees because, you know, you have that, you know, sometimes the protection on the buyer side where they can get a refund and things like that. But sometimes when you talk about the processing fees versus the fees to go through an audit, because some of this stuff is really muddled, you know, it's one of those situations where you kind of just want to make sure that everything is really
Separated.
clear. Yeah,
Mm-hmm.
you're not breaking that corporate veil or anything like that. You're making it super easy for any of the auditors to be really clear on what your personal life is and what your business life is. So making sure that you have those business accounts set up, or like I said, making sure that they're pointing to the correct tax ID, that you have the correct address associated with all of these items. I mean, even if you move a lot, that's where, maybe like a virtual mailbox or a PO box. And I always recommend, maybe getting a PO box at like a mom and pop shop. That way they have the suite number that's included, and that will be a lot easier, when you're like writing out your address and things like that.
Yeah.
So just making sure that you are have a method to consistently get all of your documents, and making sure that all of your accounts are set up so that you can receive those documents is really, really important. So even if you are not providing a service, you can still receive some of these 1099 forms, and you need to be aware that they are hiding in the background and being reported to the IRS, and they are comparing what you're reporting to all of the information that all of these payment processors and things are reporting over to you. So, but like I said, I think one of the biggest mistakes that I see is just, you receive the 1099K and you're like, cool. I mean, I know I did, business on Stripe. So yeah, of course they're going to send me something. But when you report your income, you're only reporting the actual deposits
And
that go into your account. And then so now you have a mismatch, and the computer system is just going to do like an automated audit and send you a bill and say like, okay, there's, $10,000 that hasn't been reported. And really it's just because it's the fees. So now you have to pay somebody to go back and explain the situation and do all of this stuff. So it's like costs you a little bit more
Gotcha.
money. So I always just take all of my 1099s and I add them all up and make sure that, we're good there. And also keeping in mind, the IRS will tell you what's reported to them. So you do have to wait, because there are different filing deadlines. So, W-2s and 1099 NECs, those are due by the end of January, but there's different due dates for like a 1099B, which is your brokerage statement that shows your dividends and interest and everything like that. So if you wait until about June or July, then they'll issue your full wage and income transcript, which will show every single form that the IRS has received. And then that's also another double check that you can use to make sure that you're not missing one of these pieces. So, especially in this year where we kind of have a late tax bill, where all of the payment processors have been like preparing for the last 5 years to send out this information, and they want to be in compliance. They've built all of these systems. It is possible that some of these forms will just continue to be sent out, especially if there is some confusion on some of these state levels.
Okay.
So
it doesn't. Yeah.
Yeah. So if you think it's good to check every place that you are accepting payment to make sure that there isn't a tax document that's sitting there, or, just making sure that you have all of the backups so that you're reporting the amounts that you should be reporting. But if you ever have any questions, you can get a copy of your transcript. You're going to have to do it within that first 3-year period and get it really quickly, but you can still get a copy, even if you can't get an original copy from
The person,
or you just don't even know that it exists and you want to triple check. Because if you do happen to make a mistake, you're going to be charged interest and penalties for every single month. So that's why it's really good to just act on it really fast, and make sure that you're getting the information over to them as quickly as possible. So,
so I have a silly question, maybe, potentially. It might not be. It might be. Yeah. Okay, so let's say that I have I made $5,000 to $10,000 online, but I did not receive a 1099K. Do I still have to then report it? How does this? Yes. Because I've made money. Okay. Okay.
So, and especially anything over $400.
Oh, that's even lower. Okay.
Yes.
Okay.
Yes. So, and that's what people, they're not necessarily aware of, because the 1099 NEC doesn't kick in until $600. But really, Social Security and Medicare requires that any income above $400, you start to report. And that's whether or not it's below the standard deduction.
Okay.
So yes, you do still need to report all of the income that you receive. And I tell people it's always best to just do that from the very beginning. Like they have calculations, they see your bank statements, they would be able to see, if you got a $10,000 deposit, there's a letter that's going to the IRS at that point in time. And like I said, there's so many different tax strategies that you can do that $5,000 is not even near a concern. So let's just claim it. Let's be on the up and up, because if you don't claim it and then they have to come back and chase you, then now you got to hire me and I'm going to charge you more because we have to backtrack all of this other
stuff. Got to dig in all of it.
So,
okay. And then is it possible to like get like a duplicate 1099K, but for the same like sale? Like, is that like in the realm of possibilities, or does that happen?
Not really, because when you think about the purpose of the 1099K, it's a credit card processor is running a credit card.
Okay.
So, if you process the same credit card for the same transaction using two separate card processing units, you're going to get double the money deposited into your bank account.
Okay.
Right?
Yeah.
It is possible that the same company could send multiple 1099s and then forget to say that one is a corrected version, so it supersedes the old one.
Gotcha. That little box, right? Yeah.
There is a little box at the top that shows the IRS that this is a corrected version. So that can happen, but again, that's just something that you can include in a disclosure, and then any tax professional would be able to help you show the IRS that this is an actual duplicate.
Gotcha.
And so that's why I say we report everything, so that way the computers match everything up, but that doesn't necessarily mean that everything is taxable, because there are workarounds, because the IRS recognizes that, a large corporation or even a small business, like sometimes the paperwork, like things happen in a lot of cases. So there are workarounds as to be able to fight your case, because the goal is that you're only paying the amount of tax that you are required to pay.
Okay.
So they will give you the opportunity to be able to, kind of contest income that's been applied to you that isn't actually income at all.
Okay. So in preparation for this next tax season, what should we be doing? What should we be doing as creators?
I mean, I think really a lot of it comes down to don't break the corporate veil.
Separation.
Yes. Have a separation of your personal and your business life. Even if you don't have a business, you can go to the bank, get a sole proprietorship account, and then, you can have all the Venmo deposited into that account. So just being really strict about having that separation makes it easy, not only for you, but it also makes it easier for the auditors, and they see that you're doing a lot of this legwork beforehand. So they're going to, you're going to be a little bit more trustworthy. They don't have to, dig in as much as they would have if you're just kind of mixing everything everywhere all the time. So, yep.
Separation. Okay.
Just make sure that you keep everything really separate. And then, like I said, go into all of these accounts, make sure that all the business information is actually correct. Is it using the correct taxpayer identification number? And is it being sent to the correct address? Is it the correct email address that is on there? That way you do get a notification of these items that are kind of going through. And then just the understanding that when you're using a payment processor, the income that's going to be reported to the IRS is not the amount that gets deposited into your bank account. It's the actual amount that was processed on everybody's cards. And it's up to you to figure out how much the fees were, because the 1099K doesn't necessarily tell you how much the fees were. It just tells you how much was collected in each month. So making sure that you know that you're going to have to figure out and report the fees kind of on your own.
Gotcha. Okay, cool. I feel like I know a lot more.
I mean, luckily, this is a whole issue that nobody has to think about. Yep, it was definitely touch and go there for the last few years, but this has really helped out. Like I said, it helps out small business owners. It helps out these large payment processing companies. It helps out the IRS. So just kind of, and it helps out tax accountants. Definitely.
Yeah.
Yep, and all these.
Love how everyone was kind of like, nobody wants this. We don't want this. Yeah.
Right,
Yeah.
exactly.
Okay.
But they can't do anything about it because they have to do what Congress said that they need to do. So until Congress said otherwise, they kind of had to continue to move forward with this.
I
So
mean, it makes sense. Yeah.
Yep. So 1099Ks, we went over a little bit about what they are, when you should expect them, how you need to handle them, make sure that they're included in your tax return. So if you have any questions, feel free, drop a comment below or send us a message, and we are more than happy to talk about your particular situation.
Thanks. Bye, guys.
That's a wrap on Let's Get Fiscal. Ready to stop guessing and start saving? Click the link in the show notes, grab your consult, and let's make your business work for you, not the other way around. You've got this.